Hello, today is Wednesday, 14th day of August 2013. Welcome to today's silver chart analysis video. My name is Derek, but before we get into today's daily chart, Mike Maloney recently put out a video explaining the 7 stages of empire. The empire, I refer to that of a fiat empire. Mike Maloney is someone I highly respect as a historian, author, teacher. And the link, of course, for this 30-minute video will be in the more information box, and these are the 7 stages. Stage 1 is you start your economic model with a good money. I have AGAU, which are the codes for gold or silver and gold. Stage 2, economic development and burden, which then gets into stage 3, military spending. Once you basically train your army, you then go to war for stage 4. And of course, that makes your expenditures explode. When the war is done, you got the debasement, which translates to cheaper metals in your coin, aka reducing the silver from not being there to nickel and copper. And the stage even after that was taking your nickel and copper out for like cheap steel. Worthless fiat, which is basically printing as much of the paper debt notes without anything backing it. That's stage 5. Stage 6, the stage that he states we're in, which is the masses aware of a currency debasement, which results in a loss of faith towards the currency system. And the final stage, number 7, is the currency collapse, where real tangible assets take over. So I highly recommend the video. And again, these are the 7 stages. Now let's move on to some technical analysis. Silver getting close to the high 21s into the 22 level, up about 1.82% as of a quarter after 1 p.m. New York time. This is pending, of course, a late day collapse. This will be the 6th consecutive up day in a row, starting within this bottom in here. The last time there has been 6 up days in a row for silver, using the close at 5:15 p.m. Eastern time, is that of early January of this year. But within this chart, what we are starting to see now is this 18 average band for the first time starting to rise after it had a consolidation stage. It's, of course, at this big 21.48 level. Originally, when it went there, it got up to 21.46, 2 cents shy, and then pulled back down to the 21.10, 15-ish area. So it had a little bit of retracement. Now it's had 2 days where, well, yesterday it traded above and below this area where you're not sure, and it's to a degree you're still not sure if this area is going to now be resistance or support. As far as next key resistance levels are concerned, the range from 22 to 23 is by no means resistance on the long-term time frame. It can only be that of short-term resistance. I'm only going to show one chart, but multiple charts state that the entire range from about 23 to about 24, this area in here, is the next significant level. The next significant level after that is 26. So those are the next 2 areas of resistance. What you do look for when it breaks this type of pattern where you have this consolidation phase within this, after coming on a downtrend, and then the sideways 18 averages, you have a clear breakout which has now occurred. So now you need to see either the big push higher, which is really trading into the mid 22s, or any pullback to find support at this key resistance level. That's why, again, the low 20s is a key level. As well, of course, as this rising 18 average band come into it. And then when you go back higher, break the resistance that it establishes. Right now, it's trading pretty much at the highs for the day, so it's probably going to go higher than where we are now. But then when it breaks that level, you can start to say to yourself, it looks like the bear market is over and we're starting a new intermediate term bull market. One interesting note I was thinking of as well is if you look back to the breakout of 2010, And this we'd be at the September levels when it was at 2181. At that point there, if you were to be buying silver, you were getting what over spot at most major sites, at most major dealers. The quick answer is that silver costs about as much to buy now at 2181 as it did on the run up in 2010 at about 23 or so. Just something to keep in mind, which is really showing you the supply versus demand on how demand is really been taken over. And if you're following Drudder's channel with the Drudder Divergence showing how the silver sales are just going through the roof, and we've been having this major price decline for even 26 silver people would have considered and did consider to be that low level. I have mentioned that regardless of how low it goes, obviously 1821 is the low now, but whether it would have been 22 as the bottom, what we have at 1821, or whether it would have went down to 13 or 14, the probability odds that 26 is some sort of resistance level, whenever that time comes when it gets there, is pretty high actually, and I'll talk more about that when we actually get closer to that level, but that's just something to keep your eye on. I do expect this bull market to continue to run, whether of course short term it comes down, like I'm saying, this 18 average band could very easily do so, because it's 6 straight days in a row up, does mean that you could be in need of some short-term consolidation. So thank you for tuning in, and have yourself a great day. Bye-bye.